if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they...
And there you have a quick take from Cathie Wood. We'll hear the rest from Cathie before we get out of this video. Before that, what's happening, crypto crew? Sean's coming back at you, another cryptocurrency video. Getting straight into it, we have gold. Gold is ripping to the upside today and just going extremely parabolic. At the current time of this recording, you see gold is coming in at 1932. Now, once again, we have to pay attention and look at signs of the time to see what gold has been doing. Is gold still in a downtrend, or is the trend over? So just taking a look at the trend, we see that gold did top out back in May of 23, around 2050. It actually wicked all the way up to roughly about almost 2100 at 2081, but that's the most local high that gold has put in for the year. So since then, we put in this high, we put in a low, we put in a lower high, a lower low, a lower high, and then a lower low. But then right now we've had this parabolic move. If we zoom into the previous price action over the past week, we've came down and we've got back above this 20 moving average. And right now at the current time it's recording, we are right above that 200. So is this a bullish indication? Yes. Now, when you see this bullish momentum to the upside, you have an uptrend, you have a quick pullback. The pullback doesn't go to that 50% mark, but then has the bounce up. And then that quick pullback doesn't go to the 50% mark of this candle here, and then has this major bounce up. So will we get a pullback? Potentially. Will we have continuation? Potentially. Eventually a pullback will come. Could we have continuation through the 200 and have a pullback for the flip the 200 from resistance to support before having a continuation? And is gold a leading indicator of what's going to happen for risk on assets? This is something to pay attention to. Bitcoin dominance. We've showed this before. Bitcoin's coming in around almost 51%. We've actually wicked up to 51%, didn't quite hold, didn't quite maintain it. But right now, 50.89% at the current time of this recording. So we have this 1, 2, 3, 4, 5. That potentially could be playing out. And is this a retracement? Are we seeing this A, B? Are we going to see a C leg pull back to retest this even lower? 46, 47%? Potentially. But what you see right now is some confluence right here. This blue line is the actual 200 moving average, which is a very strong level of support. But then also we got back above this orange line. And are we going to see this orange and blue line have a bullish cross? That's definitely bullish for Bitcoin and crypto, but we have to get back above this. And coincidentally, we did the fib extensions. If we zoom out a little bit on this chart, we see that we are running right into that 0.382 level. And if we zoom in, the 0.382 and that blue line are sort of converging. So there's a lot of downwards pressure right here. Could we blast through this? And then could Bitcoin, blast off as far as the overall Bitcoin dominance? That could be what's in the cards next for Bitcoin. But then, taking a look at an update from CryptoCon. Are you too late? Time of fear for Bitcoin may finally be over. The cycle bottom couldn't be any more clearly in, with our deep move in the red Nupal zone. The first move to the yellow comes after, followed by 1 to 2 moves in the orange fear, and that's it. So looking back here, we see that every time we have these bottoming structures, every single time we have this somewhat first move into the yellow and then this sort of double peak, and every time this happens, the bottom has been in. Every single time the bottom's in. Right now the bottom is right here, and we just made this play once again. So could we be getting ready to ramp up to the upside? Could we be seeing high upwards buy pressure in Bitcoin in the upcoming 12 to 24 months? Bitcoin bros definitely think so. Stock Money Lizards is showing you this is the risk, low risk, intermediate risk, high risk chart. Risk assessment of investment. So right now he's saying we're in the immediate risk area, and the high risk has not came yet. But how parabolic will the high risk happen? Well, are we going to see a high risk in this level here? Because no, there is overbought territories. But right now, it's just intermediate. So could we see a high risk, back to intermediate, and then another high risk before we get that ultimate cycle peak in 2024, 2025? You be the judge. But either way you cut the cloth, the price is definitely still a buying opportunity. You have an opportunity to double your money, triple your money, 10x your money, depending on how high Bitcoin goes. But just pay attention. Don't wait until you're in this high risk to be buying, because that is when you get dumped on. And to finish off, the founder and CEO of ARK Invest, Cathie Wood, is talking about her base case and her best case scenario. Bitcoin could be going up to $1.5 million by the year 2030. But let's hear what Cathie has to say about this.
But I think the institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%. That may have gone down a little. But if we're right, that assumption alone, I have been in the markets for a long time. And as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%, and then they migrate to 5%. So I think in this one it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets. But we make very cautious assumptions. And I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin. And the bull case is 5%. If we're right and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Mm-hmm. Sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies. And absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.